Yes, hello everyone. A very good morning to all of you and welcome you back to our income tax revision classes. Okay, so guys, we have already done our four chapters, which is your basic concepts, your residential status, and the third one, which is your exempt income. Yes, hello everyone. Just a minute. Very good morning to all of you and okay, further in the last class we have also seen house property. So now we are going to start with our next chapter, which is income from salary, and we will try to finish this chapter as well as we'll take the next from this, that is you are going to be capital gains. Okay, so before going to the next session, let's quickly revise what we have done in the last session, right, starting from the exempt income chapter. Okay, so everyone here, yes, just a second. Okay, in exempt income, first thing we have seen that there are certain income which are exempt. So these are not going to be the part of your total income, right? So first of this is your income from agriculture. When they are defining income from agriculture, they have given four different part things which will be known as agriculture. Just a second. Why my screen is not changing? Yeah, it's there. So yes, there are four such income which will be known as agriculture income. The first of this is what, when an agriculture land is rented in India for the purpose of agriculture. The second one was when you do any agriculture produce. The third one was when you give a dwelling which is on agriculture land for rent. And the fourth and last one was from the income from the nursery. Now here when we are talking about agriculture produce, if you produce anything which is and do all the process which is necessary to sell it in the primary market, it's absolutely exempt. But if you do any further such process which change its forms, then it is no more exempt. So in this case what we do, we make it part taxable in agriculture, part business income and part agriculture income. Agriculture income is exempt, business income will add up to your PGBP. Now further here, how we are going to divide it. So we will see the fair market value as on date when it was put on for the further process. Before that it is going to be agriculture income. After that it is going to be your PGBP. Further, government has given some regulations for such four businesses, four agricultural thing in which the percentage has been predefined. One is tea, coffee, which is 40-60. 40 business, 60 is your agriculture. But if the coffee is grown, cured, nurtured and grounded and roasted, everything is done, then in that case it is how much? 40-60. And sorry, and if coffee is only grown and cured, in that case it is 75-25%. And in case of your income from rubber manufacturing is the percentage is 35-65 percentage. Further, agriculture income is exempt, but when it adds to your other tax liability, it simply pushes your all the slabs upside. How does this and when does this happen? In the case, in the three situation: one, when the person is individual, HUF, AOP, BOI, specifically when they have slab rates. Second, income of agriculture is more than 5,000. Third is your situation when your non-agriculture income is more than basic exemption, respective basic exemption. In this case, if this happens, then you will calculate your tax from following these four steps. What are the five steps? Sorry. First step is tax on your total income, which includes agriculture income as well. Step 2, agriculture income plus basic exemption as it is. Step 3, we'll do tax on step 2. Step 4, step 1 minus step 3, and step 5 you will add cess to this, and this comes your final tax here. Everyone clear? So this we will do when these three conditions have been satisfied. Going further, the next part we have seen all different exemptions. One of them was HUF getting a member of HUF getting income from HUF. Second one was partner getting income from partnership firm, income from partnership firm in the share of profit, not salary. Okay. Third, we have seen when the remuneration is received by any foreign diplomat, if they give exemption to our diplomat as well. Fourth, we have seen in any foreign company employees working in India for only 90 days. Then we have seen any Bhopal gas victim compensation to them, any compensation from Supreme Court, state government, central government or local authority to the persons, even that is exempt. Further, what we have seen, yes, royalty to NTRO, and then educational scholarship, Sukanya Samruddhi scheme, maturity, and also the daily and competency allowance of our MLEs is also exempt. Further, any reward in case of artistic work or scientific work by government, and pension to the Paramvir Chakra, Mahavir Chakra or Veer Chakra holders. These are absolutely exempt. And the last exemption was for Sikkim is individual for any income earned in the state of Sikkim plus dividend and interest is absolutely exempt. Okay, but this is not available to the Sikkimese woman who has married to non-Sikkimese men after 2009. Thereafter, the last exemption which was there in this part of this chapter was your, just a minute, yeah, the last exemption here in this part of the chapter was or your 10AA for the SEZ units. In case there is any SEZ unit, so in that so for first 5 years the exemption is fully 100% of export profit, that is your export proportional profit. For the next 5 years it's 50%, and the next 5 years it's 50% or amount you credit to the revaluation reason. Okay. Then we have seen the 1480 disallowance, which simply states whatever expenditure you do to earn income which is exempt will be also not allowed to you. Further, thereafter we have moved to the next chapter, that was your income from house property. Okay, in that we have seen that there are 3 types of property: LOP, SOP and deemed to be let out property. Further, we have seen what is going to be the format here. So in the case of format, first we calculate the expected rent, which is municipal value or fair rent. Guys, you have to speak with me, okay? आप बोलोगे मेरे साथ में, just a second.
Very good afternoon, and I'm speaking with Mr. Sumeet.
Yeah. So here, guys, what I'm saying, yeah, please speak with me so your revision will be more helpful for you. Okay, so guys, what you have to do here is pay attention. First is your expected rent, which is municipal value or fair rent, whichever is higher, subject to standard rent. Second is your actual rent received or receivable, from which you will subtract what? From this you will subtract your irrecoverable rent if rule 4 conditions are prescribed. What were the 4 conditions? The tenant should be bona fide. Okay, he should be not he should be like removed from the house, he should not be given any another house, and you should take all that measures which are for the recovery of the rent. Okay, and then what comes is your GAV, which is higher of your expected rent or actual rent. Once you get a GAV, you will subtract municipal taxes actually paid by the owner. Then what comes into place is your NAV. From that you will give 2 deductions: section 24A, 30% of NAV; 24B, which talks about interest on borrowed capital. Interest on borrowed capital is limited for self-occupied property, unlimited for let out or deemed to be let out property. For self-occupied property, interest on borrowed capital will be limited to 30,000 if the house was purchased or a loan was taken before 1999. Further, if the loan is taken for any other purpose than construction and purchase. In case of construction and purchase and after 1999, the limit is 2 lakh rupees. And then final comes your income from house property. Thereafter we have seen different scenarios, in what scenario what to do. I'm just quickly revising the scenarios. The first and in the very most important scenario was when there are more than 3 properties self-occupied. So in that case you have an option what to do. We have also solved this question here. So what we will do, first we'll assume all as deemed to be let out and we'll calculate the income. Then we'll assume all as self-occupied, we'll calculate the income, and then we'll take different combinations. The combination which gives the least income, that's what we are going to select. Further, if your house property is occupied for the part of the year and self-occupied for the part of the year, go normally, take expected rent for the complete period, actual rent for the only rent out period. If you receive any arrears, simply minus 30% from that as a deduction, and the rest will be taxable here. Further, if your house property is part is self-occupied, part is let out, in this case treat them as 2 different units and divide all them as per the proportion they are being shared. Further, if it is a joint property, in case of joint property, see whether the property is self-occupied or let out. If let out, solve normally, income is whatever there at the end, divide it among all the all the owners, and in case of self-occupied properties, calculate separately for all the owners. Further, if the property is vacant, that was another interesting case. In that case, you will write the equation: expected rent, which is nothing but municipal value or fair rent, whichever is higher, subject to standard rent. You will write actual rent, received, receivable, and you will write vacancy period ka rent as well. If your expected rent is higher still from the other 2, your GAV will be expected rent. If your other 2 are higher, your GAV will be only and only actual rent. Okay, so I feel the maximum cases also I have covered. Yeah, if the property is self-occupied, then obviously the NAV is directly going to be 0. That's what there as well. Okay, Is there anything remaining? Yes, guys, do you have any question here? Yes, do you have any question, any particular thing that has to be repeated or not, or shall we start quickly with our next chapter? Come on, say me quickly, guys. Come on, everyone, say me. Shall we move forward, or do you have any queries here? Ari, say me yes or no. How I will understand? Okay, so it seems everyone is saying there is no problem with them. That's great. Let's start with our next chapter, which is your income from salary. Okay, so this is going to be very interesting for you all because obviously once you are all chartered accountant, you are going to earn lots and lots and lakhs of millions and thousands of crores of salary with you, right? So how you are going to do the taxation of this salary, that's what you are going to learn in this chapter. Very important, very interesting, and it's a bit mechanical. Okay, so there has to be not so much of intelligence has to be poured into the chapter, as it is very mechanical. You put your figures into the formula, your answers is out. Okay, so for such questions, this becomes such mechanical questions become more easily scoreable for you. So this chapter you have to focus. See, simple, it's very simple. Where the students lose your focus, you have to focus there. Automatically everything will be fine. Okay, so this chapter is a bonus chapter, I'm saying you, because the questions are generally very straightforward. So if you know all the formulas and all different things, your answer would be amazingly correct and you'll get the full marks. Okay, so now here, so in this chapter, income from salary, just a second, let me see, where is my pencil? Yeah, in this chapter, income from salary, see, please remember that employer-employee relationship should be there, and whenever employer-employee relationship is there, in that case the salary will be taxable in this head. Further, tax will be there on the basis of due or received, whichever is higher. Okay, and wait a minute, let me see. Yeah, remember these 2 points. If any person surrenders his salary to the central government, तो भाई ने पूरे सैलरी गवर्नमेंट को दे दी है, तो उसके ऊपर टैक्स कहाँ से आएगा? ओके, बिकॉज उसने 10-20% टैक्स नहीं, पूरी सैलरी दे दी है. ओके, फर्दर द सैलरी रिसीव्ड बाय पार्टनर फ्रॉम पार्टनरशिप फर्म will be taxable in PGBP. Please remember this. Whatever salary is received by a partner in a partnership firm will be taxable in PGBP. It won't come under this head. And share of profit is exempt. Further, the salary received by MP MLA, which you have answered me in the last class, will be taxable in IFOS, and all daily allowance to them would be exempt. So this two, other than this two salary, all the salaries are going to be there here in the chapter income from salary. So the trigger point here is the employer-employee relationship, and whatever employer pays, whatever perquisites given by employer will be all taxable under the head income from salary. So here is a big notable format which a complete question of salary can involve. Okay, so the first basic things I'm going to take from here itself is your basic salary. So basic salary is the basic one which has been mentioned in the question as well. Normally, whatever is the basic salary, just pay attention on what period it is for, whether it is for the complete year, part of the year, 6 months, 8 months, whatever is there, whether it is monthly given or yearly given, take it as it is and write down the complete basic salary as it is in your income from salary calculation. Further, dearness allowance. Now this dearness allowance is generally given to employee to compensate for the inflation which is there. So whatever is the dearness allowance as mentioned in the question, write them total here itself. Whether it is included in the whether it is inclusive or uninclusive, we'll see all that things later. But right when we are calculating the total salary income, do not worry about whatever has been said. Whatever is the salary, whatever is the DA, take it as it is. Okay, whether it is forming part of salary or not, do not worry about this. Please remember, sometimes DA is given directly, sometimes it is given in the percentage of salary, sometimes it is given in a more complex way, monthly, per monthly or yearly. However it is given, take it complete for the complete period, however how much ever month you are going to receive it. Okay, further, commission. Now commission is there. So commission, if the commission is on turnover based commission, still write down whatever commission you are receiving. Commission is a fixed commission, still write it down. In the total, first you will take them all as it is. In the calculation part, in the separate different heads, that we will see later on. But first when we are starting the salary question, you will take them all as it is. Okay, next is bonus. So please remember a star point for bonus, that all the salary is taxable on due or received, whichever is earlier. So for example, if I'm taking advance for next 3 months, it is taxable now itself. If I'm not getting salary for 6 months, still it is taxable because it was due. Okay, so salary chapter is on the basis of due or received, whichever is earlier. Okay, but bonus is one thing which will be taxable only and only on the receipt, because bonus पक्का नहीं है. बहुत सी बार employer बड़ी बड़ी बातें कर देता है और bonus में कुछ भी नहीं देता है. So bonus is certain thing. This is how you'll remember, which is taxable on paid basis only. Rest everything will be taxable on due or received, whichever is earlier. Further, advance salary arrears, whatever advance salary you get, just example I have given it to you, it will be taxable in before whenever you receive it. Arrears of salary, पिछले कुछ सालों का बचा हुआ जो आपको तब नहीं पता था, तब कंफर्म नहीं था, अब जाकर मिला है, अभी आप ऐड कर दो fully. Okay, what to do here? There is one what we say rebate, you get it here. We'll see it later on. Next is your gratuity, pension, leave salary, allowance, prudent fund, voluntary retirement scheme, superannuation fund, retrenchment, compensation, perquisite, which we will start doing individually. Okay, so everyone clear till now? Yes, Surjan, the thing is what, see, from Trisha classes, you will get this PDF. Okay, you will get this short, brief note, bullet notes, which is given here. So this will be helpful for you for a quick revision. Breast daily notes you would be having. The notes from which I am revising, I can share this with you currently. First case, because these notes are, see, it's blank in between. The notes are made in such a way that you can see here, at many places these are blank, see. At many places the provisions are not being mentioned. So you are not, like we were not there in regular class. So these notes will be not helpful for you. In fact, it will add a complex to you, because some provisions are there, some provisions are not there. So that's why I am not sharing this currently with this particular notes with you. But yes, you will be getting this notes from the not this. This is your study material. This obviously you would have got. This is your Trisha classes note, which will be shared by you. Say me, have you got this notes or not? Every one of you, have you got this notes? Okay. Okay, yeah. So you just refer that notes for now. The purpose there is no problem for me to share these notes, but this will really add a complication for you. It will confuse you much more than solving your thing. If you like any particular diagram, particular shortcut, particular summary here, ask me to stop. I will stop for a minute. You take a screenshot. Okay, you ask me, sir, please wait. Let me take a screenshot. Just message me. I will go on that summary. I will let you take a screenshot. So that would be right for you, but giving these notes would be a bit problematic for you at your end itself. Okay, so if you want to take any particular diagram here, any particular flow chart from here, from this what I'm teaching you, please let me ask me, sir, wait for a screenshot. I will give you, so you can take a screenshot of that quickly. Right now there are certain things which you may require to take a screenshot. Just let me know in the message, I will wait for you. Okay, chalo now the most interesting parts of the salary comes here into picture. Okay, before starting this, same one thing, what do you feel about salary chapter? Is it simple or difficult? Yes. Okay, so guys, everyone, for the Trisha classes notes, which if you haven't got it, check the link in the description. The note link is there. That's what Shiraksha has shared with me. So everyone, check the link in the description for the notes of Trisha classes. And in the meantime, let me know what is your view of the salary chapter. Is it easy or simple or difficult? Easy, simple, तो एक ही बात हो गई है. Yes, let me understand your view, so I will take you accordingly here from here for the revision. More to remember. Yes, correct. I feel many of you are still struggling. You don't remember only salary chapter. So easy or difficult, sir, याद करना और भी मुश्किल है. Okay. Pay attention, everyone. Now let's start with the chapter. The first part of this chapter talks about gratuity. Okay, whenever the employer pays you gratuity, okay, first see whether the employer in your case is a government employer or non-government employer. Okay, because, and wait a minute, as well you will see that whether the gratuity is received during the employment or at the time of retirement. Okay, so now see, gratuity is generally a thankful note, I will say in short, which the employer pays. So सबसे पहले you will see that whether you are received during the employment, like every month, every year, or after the employment. If you are receiving during the employment, this is, I will say, thoda thoda. Okay, it is fully taxable to all the person, whether it is government or non-government. When it is fully received after the employment, मतलब आपके retirement के time आपको मिला है this thing, in that case you will divide this into two parts. The first part is of your government employee, another part is of your non-government employee. In case of government employee, it is fully exempt, pura exempt. Pay attention again, I'm saying gratuity. Now please pay attention, everyone. Think just like you are learning like a first time. Okay, gratuity received. सबसे पहले you will say, is it received थोड़ा थोड़ा or at the end of the employment? If at the end of the employment, हम will see later, थोड़ा थोड़ा fully taxable. If at the end of the employment, in that case you divide it into two parts. Government employee fully exempt. Non-government employee, we will see, we will divide them further two parts. Whether they are covered in POGA or not covered in POGA. What is POGA? POGA is your Payment of Gratuity Act. So if they are covered in POGA, the exemption is, please remember, the exemption is, okay, what happens in a pressure of examination, sometime what you do, आप डायरेक्ट इसका आंसर टैक्सेबल में लिख देते हो. टैक्सेबल नहीं, whatever you are received, you write it upside and you will subtract exemption is. Exemption is least of the three. First, actual received. Second, maximum 20 lakhs. And third, 15 by 26 into salary per month into number of years completed in service, rounding off allowed over 6 months. So pay attention. If the employee is covered in POGA, in this case the exemption is least of the following. First, actual received. Second, 20 lakhs. Third, see here, third is what? 15 by 26. मतलब in short, आप हाफ मंथ ले रहे हो संडे को हटाकर, हाफ मंथ कितना होगा 15/30, 4 संडे हटा दिए कितना होगा 15/26 इनटू सैलरी पर मंथ, ओके, इनटू नंबर ऑफ कंप्लीटेड ईयर्स, and round off is allowed. Round off is only when allowed when excess of 6 months. If it is 6 months, do not round it off. If it is 7 months, round it off. So whatever will be the lower of this, that's what going to be your exemption. And if he is a non-POGA employee, in this case the first two conditions are same, actual received and maximum 20 lakhs. The next condition is half into average salary per month. Now this average salary का different formula है वो हम देखेंगे. Into number of completed years, no rounding off allowed. Even if he has worked for 20 years, 11 months, still you will take 20. He is not covered in POGA, no rounding off allowed. Covered in POGA, rounding off allowed. Try to remember it in a comparison, then it will be more helpful for you. See, पूरे चैप्टर में गिन के ये 4-5 चीज थोड़ी सी डिफिकल्ट है, ये अगर कर ले तो चैप्टर इज सिंपल स्मूथ फॉर यू. So what you have to do is now, once you take a screenshot of this, what I have done here, or whatever in whichever way you have learned, and post it, stick it somewhere near your mirror or somewhere near where you do brush. So what will happen, automatically daily you will see it, and I can say you 100% you can learn it in the same way. Okay, so now here, what is salary per month in case of POGA employee? So in case of POGA employee, it's very simple, basic plus DA. Basic plus DA, complete DA is your salary per month for a POGA employee. And average salary per month is, see, average salary for last 10 months plus average DA, only turnover wala, plus average average DA in terms of the retirement wala, plus average turnover commission of last 10 years, not fixed commission, your turnover wala commission. Okay, so this salary I will say hamesha wali salary, because it is going to be used many times. Don't worry, further you also have one simple chart of salary, which salary is used for which purpose. Okay, so guys, now here again I'm saying, for POGA employee the salary is basic plus full DA. For non-POGA employee the salary is basic plus DA only in terms plus turnover wala कमीशन. सो लास्ट 10 मंथ्स का आप लोगे और 10 मंथ्स का आप एवरेज करोगे. ओके, समटाइम इन क्वेश्चन दे गिव डायरेक्टली गिव इट टू यू, समटाइम इन क्वेश्चन दे गिव चेंज इन सैलरी फॉर लास्ट 10 months, so you have to consider that. Okay, so when we are taking average of last 10 months, so what you will take, salary, basic salary into 10, DA into 10, whatever total commission is there for that 10 months only. What they do, this commission they give for 12 months. So you have to convert it for how much, only 10 months, and divide it by 10. So this will give you an average salary for last 10 months, and this will give you the gratuity ka exemption. Everyone clear? So once again, please everyone, okay, before going it, do one thing. I'm giving you 1 minute time. Revise it nicely right now itself. Either you follow this or whatever you have in your notes, follow that and learn it right now itself. Come on, I'm giving you 1 minute time. It's sufficient. Stay focused. Let's finish each of deduction here itself in the class. In the meantime, if you have any query, ask me, guys. Done, everyone? Okay, so then let's revise with me. First thing, gratuity if received monthly at the time of employment, fully taxable. If received after the employment, we will make two parts. Government employee fully exempt, non-government employee again two parts, whether covered in POGA or not covered in POGA. If covered in POGA, the exemption is, please speak with me, the exemption is least of actual received 20 lakhs. Come on, speak with me. I can hear you. Yes. A list of actual received 20 lakhs or 15 by 26 into salary per month into number of completed year, excess of 6 month round off कर देना. Remember it in the same way. So there will be no complication for you. Once again, list of following actual received 20 lakh rupees, 15 by 26 into salary per month into number of completed year, excess of 6 month round off कर देना. Okay everyone, yes. And here further, what will happen now here? Salary per month is basic plus full DA. If he is not covered in POGA, in that case, your exemption is list of the following. Again, actual received 20 lakh rupees or 1 by 2 into average salary of last 10 months into number of completed years. No rounding off allowed. What is average salary here for last 10 months? Is our hamesha wali salary, which is basic plus DA in terms plus turnover wala commission. Everyone clear? Okay. We will see if the time permits us at the end. We will come back and we can see the questions as well. Okay. Right. Or else let's do one question for gratuity. Gratuity का question हम कर लेते हैं. Right from the, wait a minute. Yes. Let's do this question, guys. Everyone. Shall we do this question? See here. Mr. Ravi retired on 15/6/11 after completion of 26 years 8 months. So here itself आपकी एक बत्ती जल जानी चाहिए. क्या जलनी चाहिए? If is POGA, rounding off हो जाएगा. Not POGA, rounding off नहीं होगा. Service and received gratuity of 15 lakh rupees at the time of retirement. His salary was. So now see at the time of retirement. It's written here. At the time of retirement, he received this gratuity. So if he would be received during employment, fully taxable. At the time of retirement for government employee, fully exempt. So what you will write in the question? You will write gratuity received 15 lakh minus exemption is 15 lakh, taxable 0. Why exemption? Because he is a government employee. Okay. Next case, if he is covered in POGA. So guys, if he is covered in POGA, the exemption is, again I'm saying I'm pressurizing this thing. Exemption is first actual received, which is how much? 15 lakhs. Second 20 lakhs. Third, chalo, let's do the exercise. In case of POGA, how much is the salary? 15 by 26 into salary per month plus DA fully. So guys, what's your salary per month? 50,000. DA total लेंगे हम 10,000. So what this comes to? This comes to 60,000 into number of completed years. Round off कर देना. So round off चलेगा, but about 6 months only. Is it about 6 months? Yes. So how much we'll do it here? Multiply. We'll multiply here 27. Can you say me what is the answer of this bracket, guys? What is the answer of this? It's 15 divided by 26 into 60,000 into 27. So this comes to 9,34,615. Least of this is exemption. So what would be exemption amount? This much. So you'll write it gratuity received 15 lakh minus exempt as per working note number 1 9.34 lakh. Therefore taxable would be 5.65 ... lakh. Everyone clear? Okay. Now if he is not covered in POGA, he is covered in POGA, not covered in POGA. In this case, what would be the exemption? Yes. What things you take under the, now what would be exemption, guys? Again, first actual received, which is 15 lakh. Second, maximum 20 lakh. Third, what is third here, guys? Half into average salary for last 10 months. So salary haven't been changed here. So what would be a salary here? 50,000 plus 10,000 nahi, 10,000 ka 60% only, right? Because that's what is only getting the part of the retirement benefit plus 1% turnover commission. So is commission fixed or turnover based? It's turnover based. Then it is allowed to take in the salary. See how much commission is given, 1% of एंड सेल इज 12 मंथ्स का 1 करोड़ 20 lakhs. हमको कितने मंथ्स लेने हैं? हमको सिर्फ 10 मंथ्स का लेना है, राइट? सो अकॉर्डिंगली यू विल टेक ओनली दिस फॉर द 10 months and you'll do the average. So 50,000 into 10, this 10,000 into 60% into 10 plus 1% into 12, 1.2 crore upon 10. Okay, this will give you average, multiply by number of completed years. Here you will not round it off, so how much you will take? You will take only 26. By solving this, whichever will be lower, similarly we'll subtract it here and we get the final answer here. Got it? So this is how you are going to solve the gratuity ka question. Everyone clear? Okay. Yes, everyone, thanks for your answers. Perfect. Very good, guys. Stay active in the same form. So even I feel it fun to learn with you. Okay, next thing is your pension. So gratuity is the most difficult thing. Rest everything is quite simple here in this chapter. The next thing we are talking about is your pension. Again, pension if received uncommuted pension अगर आपको मिल रही है, so uncommuted pension refers to periodically, मतलब थोड़ी 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 every month आपको कुछ uncommuted pension मिल रही है, so that is fully taxable. Whether it is government employee or non-government employee, it is fully taxable. Okay, and if you are receiving the pension commuted, आपने commute कर ली, जमा कर ली, एक साथ में ले रहे हो, okay, so in this case again for government employee fully exempt. For non-government employee we will make two parts. We will see whether he is receiving gratuity or not. If he is receiving gratuity, the exemption is 1/3 of total. If he is not receiving gratuity, the exemption is 1/2 of total. Okay, please remember, when I'm saying total means total pension. What happens sometime in question, what they do, you know, they say that from 1st of April he is receiving up to 30th of September, say 10,000 rupees per month gratuity. Okay, on 30th of September he had commuted 50% and he got 10 lakh rupees. So now please remember one thing, this is a very interesting type of question. In question you need to understand that from this 10,000 he has commuted only 50%, means balance 50% he is going to still get for the balance of year. Okay, and the commuted one, in this commuted one we will see how much is exempt. If he is government employee, fully exempt. Non-government employee will ask him, भाई तुझे पोगा मिलता है क्या? Sorry, तुझे gratuity मिलता है या नहीं मिलता है? Gratuity मिलता है तो exemption is what do we say, 1/3 of total pension, और नहीं मिलता है तो exemption is 1/2 of total pension. Now total pension means not only this 10 lakhs, 50% is 10 lakhs. So total pension कितना हुआ? 10 lakh divided by 50%. So total pension is how much? 20 lakhs. So 20 lakhs का 1/3 होगा या 1/2 होगा. Okay, once again I am saying it to you, pay attention everyone. Your financial year starts from 1/4, 31st 3. It says you that up to 30th of 9 every month is getting 10,000 per month. Thereafter he have commuted from here 50% of this. So please remember, इसका 50% अभी भी मिलता रहेगा हर महीना, जो fully taxable है. जो 50% मिला है अभी, उसमें से हम exemption माइनस करेंगे. How much would be your exemption if you are receiving gratuity 1/3 of total? If you are not receiving gratuity, 1/2 of total. So how you are going to see that? So 10 lakh is 50%. So 100% is 20 lakh. So 1/2 or 1/3 of this total pension would be exemption. So if he is not receiving gratuity, half of total means 10 lakh would be fully exempt, taxable would be 0 in this case. जीरो फ्रॉम कम्यूटेड, जो 5,000 बचा हुआ पे मिल रहा है ना, वो फुल्ली टैक्सेबल है बचा हुआ. सो सी 10,000 for 6 months, 5,000 for 6 months, and this is fully exempt. This would be the taxability. So this is where as the formula is simple, they give this small complication for you. So you need to be very clear with this, how to solve this. So whatever is uncommuted is still taxable, commuted exemption from total 1/3 or total 1/2. Everyone clear with the pension as well? I'm giving you 1 minute's time. Please, please, please learn it here itself. घर पे आपके पास बहुत सारे काम है, बहुत सारा पढ़ाई करना ऑलरेडी. सो आप मेरी चीजें मेरे क्लास में ही खत्म कर दो. दैट्स द बेस्ट थिंग यू कुड डू. If you would be in regular class, I would be have given 5 minutes for this. But as it is revision, I'm still giving you 1 minute. In the meantime, if you have any query, please ask me, guys. Everyone, will you remember the same? Very good. Let's go to the third part, which talks about leave salary. Again, this leave salary, what happens if the company generally allows you to take certain leave, number of leaves in a year. If you don't take this leaves, they still pay you for this. Okay, and if you take this leave, they still pay you salary for the leave as well. So whatever is the leave salary you get, if you get the leave salary again during the employment, like every year अगर आपको थोड़ा थोड़ा मिलता है leave salary, so in that case it is fully taxable. And if you take this all the leave salary whichever was there for the past year, you take this at the time of retirement, in this case for government employee again it is fully exempt. For non-government employee again the exemption is least of the four. What is this least of the four? The first is actual received, the second is 3 lakh rupees, fourth is leave credit into average salary per month. Okay, so what you will do, in a question of leave salary, you create two working notes. Okay, so first working note will calculate your leave credit. What is leave credit, guys? So leave credit is whatever leaves you are allowed every year. Okay, just a second, it's mentioned here. Yeah, whatever leaves you are allowed every year, maximum to 30 minus leave you are already taken up to now. Okay, so say for last 10 years you were allowed 20 leaves, 20 into 10, 200, say 150 you already taken, so leave credit is how much? Only 50. Say leave credit was allowed 45, but you will take maximum how much? Only 30. So working note number 1, you will calculate leave salary. Working note number 2, you will calculate average salary. What is average salary? Again, average salary here is your hamesha wali, that is your basic plus DA incomes plus turnover wali commission, just like your non-boga employee. Okay, so once you do this two working note, this question is going to be quite simple for you. Leave salary, again I'm saying, if it is received during employment, fully taxable. After employment, exemption for government employees, fully exempt. For non-government employee, it is least of the four. The first in this is your actual receipt, second is maximum 3 lakh, third is working note number 1 into 2, fourth is 10 into 2. Working note 2 matlab. See, this will automatically give you answer, and the list would be your exemption. Just go through it once, guys. Yes, everyone, just go through it once. Try to remember the same. So if you create this two working note, it would be simple for you. Don't forget, leave credit is maximum allowed. Leave credit is only 30 days. So if it is less than that, great. If it is more than that, you will take only 30 as your answer. Yes, everyone clear about it? So, will you remember these three things, guys? These three important things. One is your gratuity, live salary, and pension. Okay, all these three, if received during employment, fully taxable. If received at retirement for government employee, fully exempt. For non-government employee, आप ग्रेचुटी के दो पार्ट करते हो, पेंशन के भी दो पार्ट करते हो, लिव सैलरी का एक ही के चार पार्ट है. One is actual received 3 lakh rupees, working note 1 into 2, working note 2 into 10. Working note 1 is your leave credit, that is leave allowed minus leave taken, and working note 2 is your average salary, which is basic plus DA in terms plus turnover wala commission. Okay, so please remember what generally I speak. Okay, so you will get connected as well. Whenever the salary is basic plus DA in terms plus turnover based commission, I always say it हमेशा वाली salary. Okay, so you to keep some word like this, because generally this salary is always there. Okay, and what will happen, guys, this will help you to reduce your load from all other chapters, from such a huge discussions here. So here we have finished three things. One is gratuity, we have done pension, and we have done live salary. Just go through it. Everyone clear? Okay, now further, the next is your VRS, voluntary retirement scheme. Okay, in VRSC what happens, voluntary retirement scheme is that we ask our senior employee that please आपको चाहिए तो आप थोड़ा जल्दी रिटायर हो जाओ, हम आपको लगे तो compensation दे देंगे. Why company is ready to do this? Because they know on the salary of such person they can employ next 10 persons, because salary at the age of 60 would be obviously at that salary you can employ next 5-7 persons here, right? So in such cases, whatever the VRS compensation is there, it is paid by employer to employee. So everything which is paid by employer to employee is taxable in the hands of employee. Okay, so here also you get some exemption. Now see here, the exemption in case of VRS is, see, again salary here is हमने हमेशा वाली. Okay, so salary per month into 3 months into number of year completed, fraction को ignore कर दो, no rounding off allowed. Again salary per month into number of remaining months of service, actual received or 5 lakh rupees. So pay attention. In case of VRS, again the exemption. Here there is no exemption for government employee. Everyone is taxable. First is actual received. Second is maximum 5 lakh. Third is, pay attention. When this is say the age of how many years the person has worked, he is taking VRS here. So number of years, no rounding of allowed, into 3 into salary per month. Okay, and the balance number of months, because अब months में बचे हो गया, कुछ ही तो months हो गए, so number of months into salary. तो अगर वो पूरा काम करता तो उसको कितना पैसा मिलता, the least of this is an exemption for you. Okay, so how many years you have completed into 3 into salary month per month, number of months into salary per month is your exemption in case of voluntary retirement scheme. I'm giving you another 1 minute. Please remember it now itself. Ask me if you have any queries. Done? Okay, let's go to the next. Retrenchment compensation. Okay, it's the last. Okay, here what happens, we ask you to leave our company and go to some else company. So in this case also we give you retrenchment compensation. Whatever compensation you received, exemption would be least of the following, maximum 5 lakh, just like the bonus, just like the VRS, and it is just like the POGA, non-POGA employee, POGA employee, 15 by 26 into average salary for last 3 months into number of completed years, rounding off allowed if it is excess of 6 months done. Okay, so see, if you remember it in a sequence, guys, so it would be more simple for you. First we done gratuity, a bit simple was pension, which was dependent upon gratuity, then it was leave salary, then we have gone to this two thing, which is your VRS and retrenchment compensation, which are sort of same, so both have limit 5 lakh rupees. Okay, and this retrenchment compensation, how things derived from POGA. Yes, try to remember this as well. So just draw this all the different charts on some of your on some of your pages and stick it somewhere near your mirror or your brush, wherever you do brush in the morning. I'm saying you guarantee it would be more simple for you. This chapter would be very much scoring for you, because that's what I have done when I was in my C intermediate, as well as in final, because in final so you have same chapter, and in fact in final no one teaches you salary. The assume it you have done nicely in the income tax in your intermediate. Yes, Shika, just a minute. What you're asking? Live salary 30 days. Acha, this are you asking for leave credit? Okay, I will just say you. Don't worry. Now see, we are talking about leave credit. Leave credit at the word itself means that how much leaves are left with you. Okay. So now see, case 1 is that say you have worked for 20 years. Every year you are allowed 10 leaves. So 30 is the ceiling. 30 के ऊपर नहीं चलेगा, मैं 30 के नीचे चलेगा. So 20 leaves, and say he took say 160 leaves. He took it. So how much leaves are credit with him? So it's 20 into 10 were allowed to him, and he took 160. So how much leaves are balance? 40. That's your leave credit here in this example. Situation 2. Leave credit, he worked again for 20 years. Every year he was allowed 45 days leave. And he took, say again, he took 180 days leave. Okay. So now, leaves allowed were how much? 45. But how much is maximum allowed? Maximum allowed is only 30. Okay. So ceiling के ऊपर गए तो आपको ceiling पे रुका देगी, नीचे रहा तो no problem. So here we took 10, but here we'll take how much? 30. So 30 into 20, this comes to how much? 600 minus 180 he took already. So how much is balance? 420 units are the leave credit. Got it, Shika? Okay. Okay, everyone. So here we complete our first part of your salary, where this all different allowances, gratuity, perpetuity, and everything has to be discussed, and a difficult part, in fact, which we have done right now. Okay. So see, if you will see in the complete salary head, see how many things we have already done. We have done gratuity, pension, leave salary. This we know. We have done voluntary retirement compensation and retrenchment compensation as well. Okay. Now let's go to the next part of the chapter, which talks about different allowances. This is a bit simpler part, right? So here, if nowadays the transport allowance, how much are exempt, we are discussing here. In case of transport allowance, it is exempt only and only to blind, deaf, dumb or handicapped person. So whatever he must be receiving minus 3200 per month would be exemption only to the SSC who is blind, deaf, dumb or handicapped. Rest all, no exemption is given there. Further, education allowance is 100 per month per child, maximum 2 child. Hostel allowance again per month 300 per child, maximum 2 child. Okay, your underground allowance is 800 and your tribal allowance is 200. So you can simply remember it like this: 100, 200, 300. Underground allowance is 800. This is education, this is hostel, and you have to go from a tribal area, so this is tribal, and this is, as it is underground, so it is underground allowance 800. Everyone please remember, these are exemptions limit which are per month. So whatever month you are receiving minus per month exemption would be allowed to you this much. Okay, and transport allowance will be allowed to only SSC who is blind, deaf, dumb or handicapped. Further, in case of transport allowance received by transport undertaking, so any transport undertaking का person को transport allowance मिलता है, so that would be amount received or into 70% or 10 lakh or 10,000 per month. Okay, this would be the exemption amount here. Everyone clear? Further, another important allowance is your house rent allowance. Exemption here, this is very important guys, this is a star topic, this is very much commonly asked in examination if the question is of salary. Here again the exemption is least of the following: first, HRA received; second, 40 or 50% of the salary. 40% if the city is metro city, 50% if the city is metro city, 40% if city is non-metro city. Metro city matlab metropolitan city, not the city where metro is there. Okay, so here 50% will be allowed for only 4 cities, which is Delhi, Mumbai, Chennai and what? Come on, say me. And what? Which are the 4 metro cities? I am waiting for your answer. Say me which is the 4 city. No other city will be taken as 50%. Even though there is metro, there is Vande Bharat, there is super metro, there is sky train, there is trolley, whatever it may be. This is for metropolitan city, not a metro railway city. Okay. Further, rent paid minus 10% of salary. Here the salary is hamesha wali. Kolkata. Yes, Bhumika, very correct. Everyone clear? So in case of HRA, whatever is received, you'll write it here, and exemption would be least of the following, which is received or 40 or 50% of salary or rent paid minus 10% of salary. And what is salary here is apni hamesha wali, which is basic plus DA plus tenure wala commission. So this is about your HR and different allowances. Just go through with them guys once. Further, if there is tour allowance, conveyance allowance, uniform allowance, daily allowance, helper allowance for office purpose only, so whatever amount you received from whatever amount you spent would be allowed as an exemption. So say helper allowance for office I have received 12,000, but I have given only 10,000, so taxable would be 2,000. Yes, go through all the allowances guys once. Okay, next, these are special allowance guys for military and such person. This you have to read as it is, as there is nothing it's quite complex things here. For special hill compensatory 800 to 300, high altitude 7,000 for Siachen per month, border area allowance, this can depend, compensatory modified field allowance. So these are all things. Generally the question doesn't come generally from this part, okay, but you never know, it's ICI. Just go through all of them. It's quite difficult to learn all this, but yes, ये अब एक बार ठीक है, but ये सारा तो आपको 100% आना ही चाहिए. Okay, this has to be must. This is must. This, if question comes certain time, even they themselves note down the exemption, what is exemption limit there, because it's conditional exemptions are there. So see, this is an exemption summary. You can simply remember certain things which are fully taxable, partly taxable, and fully exempt. There are also some exemptions which are fully exempt, like allowances to High Court judge, allowance to UNO people, compensatory allowance received by a judge, sumptuary allowance received by a judge, allowance to government employee outside India. So this we have already learned. Outside India, if we see, if you pay salary outside India, it is deemed to be accrued in India, so that salary will be taxable here. But whatever allowances they get there, that will be fully exempt for such person who are working outside India and paid by government of India. Okay, and daily constituency allowance to IFOS mein jayega, that will see there. So just take a screenshot of this or and read this carefully. I will be just back. I will just bring my charger. Just read it, guys, carefully. Take a screenshot. I will be back. Yeah. Where is the clip? Yes, done, guys. Okay. Yes, let's move further. Okay, now let's discuss the next part here, which talks about Provident Fund. So here now in the Provident Fund, there is 4 different aspects. Okay, this is not working. Okay, one aspect is that you have the employee. Okay, employee gives some money. The employer, he gives some money. Okay, and yearly you earn some interest into this. So you say, for example, you invest this or you put into some bank account. So yearly you get some of the interest into this, and at the end, when you break it at maturity, you get the amount from this. This amount is kept by obviously employee. Okay, so now here there are 4 aspects into this. One, our contribution, employer's contribution, every year interest what we are generating from this, and at maturity what amount we get it here. So now here the first thing is they're talking about statutory provident fund. So there are three types of fund: statutory provident fund, and we'll see later what different funds are there. First, statutory provident fund, as law prescribes this provident fund. Okay, as law has prescribed this, first for our contribution, see, our contribution is we are putting money into this as an employee. So as an employee, if when you are putting money into this, it's in fact your expenditure, so ignore that. Okay, whatever employer puts the money into the account, which is at the end coming to you, but it is exempt as the fund is statutory provident fund. Interest which you earn regularly upon this every year or whatever you get the interest, it is also fully exempt, and the maturity also fully exempt, as this fund is what we say, as this fund is statutory provident fund, all the things are exempt. Next is recognized provident fund. In this case again, your contribution is ignored as it is your in fact expenditure. Next, employer का contribution is exempt up to 12% of हमेशा वाली salary. Okay, basic plus DA income plus turnover वाला commission. Interest which you earn is exempt up to 9.5%, and whatever you get at the maturity is fully exempt. So here what happens, as the provident fund is recognized, some limitations have been kept. Employer contribution up to 12%, आपका what we say, interest up to 9.5%, and maturity is fully exempt. The next fund is unrecognized provident fund, the last type of provident fund. Here whatever you put, ignore. Employer put exempt, whatever interest you earn exempt. At the end of period, when your maturity is there, you will divide this maturity amount into 4 parts. आपका जो है उसको इग्नोर कर दो. सी नाउ व्हाट से every year say we have put in 10,000, the same amount is put in by employer as well. Interest we have got some x amount. At maturity जितना भी आपको पैसा मिलेगा, you will make 4 parts of this. आपका जो कंट्रीब्यूशन है टोटल, इग्नोर दिस. इंटरेस्ट आपके कंट्रीब्यूशन के ऊपर जितना इंटरेस्ट आया है, टेक इन IFOS. एम्प्लॉयर कंट्रीब्यूशन एंड इंटरेस्ट देयर अपॉन, टेक इन सैलरी चैप, इनकम हेड. Got it? So you divide your final income, final maturity at 4 different types. Your contribution ignore. Interest IFOS. Employer contribution interest will be taxable under the head salary. Everyone clear? Same to same is there for your superannuation fund as well, which is unrecognized. But for recognized superannuation fund, the limit for employer contribution is 1,50,000. That's the only difference. Rest everything is same. So this is all about your provident funds. Yes, everyone. Just go through it once. Ask me if you have any queries, guys. Okay, done everyone? So that was about your provident fund. Let me quickly revise it for you. So in case of statutory provident fund, everything is exempt. In case of recognized provident fund, employer contribution up to 12% of हमेशा वाली salary, interest up to 9.5%, rest everything is exempt. If it is unrecognized provident fund, simply at maturity make 4 parts. One is your what do we say? One is your employer's contribution, ignore employee's contribution, ignore it. Interest upon that, take in IFOS. Employer contribution and interest will be your income from salary. Everyone clear? Yes? Okay. Let's go to the next part, which is talks about perquisites. Now here see, what is the difference between allowance and perquisites? Allowance are a fixed monthly payment, generally in cash, that's allowance. Perquisite is not a monetary payment, it is a benefit given to you. Okay, and it's not fixed, it depends, it changes. So now here, let's see about perquisite. The first perquisite which we are going to discuss is your long-term, what do you say? Leave travel concession. Now what happens, many employer ask employees to go on a leave, and whatever they go for a leave, they pay them for the travel expenditure which they incurred on a leave. So now everything and anything which is paid by employer to employee is fully taxable. So here also it is going to be fully taxable, guys. So now see, in case of the how much would be the exemption amount? So whatever amount received by employer, the exemption would be the following. In case of the travel is through air, that case the economy class tickets. In case of travel is through train, in that case the first class tickets. In case the travel is through bus, where so the travel ticket of the bus, if you recognize transport facility, or else for same distance how much first class car railway would cost, that much is the exemption amount. Okay, so please remember, also this exemption is allowed to father, like the spouse plus 2 children. But if now here there is some more complication in terms of children, pay attention. If the first child is single and the next child is twins, this is allowed for all three. If the first child is twins, next child is single, and so on it may be, it is allowed only for two. If the first child is single, second is also single, third is also single, fourth is also single, still it is total allowed is only 2. Everyone clear? So spouse plus 2, this 4 people can get this leave travel concession wala exemption. In short, you will remember hum do hamare do. Okay, so this will help you to remember this. But if it is twins, it is a surprise. In that case, you can allow it to 3. Everyone clear? Okay. Next perquisite is about medical facility. Now, if medical facility is given in a government hospital, ट्रीटमेंट इन एम्प्लॉयर्स ओन हॉस्पिटल, और एम्प्लॉयर का जिसके साथ टाई अप है वैसा कोई हॉस्पिटल विच इज गवर्नमेंट रिकॉग्नाइज्ड, it is fully exempt. So if any employer pays for expenditure of their employee, it is fully exempt. It is government hospital, government recognized hospital, or employer's own hospital. Otherwise, whatever amount he pay, it is fully taxable. Next, treatment outside India. If this treatment is taken outside India, then whatever expenditure is done for treatment and stay will be allowed as per the RBI limit, and travel ka will be allowed only if your GTI is less than 2 lakh rupees. Okay, otherwise it will be fully taxable. So if there is any medical expenditure done in India, in that case it is allowed only in the 4 cases, right? But if it is done outside India, it is done as per the limit as per prescribed by RBI, which will be given to you in question, but the deduction for this limit will be given only for the treatment and the living expenditure there, benefit of stay. But travel expenditure has to be beared by you if your gross total income is more than 2 lakh rupees. Everyone clear? Yes, Ojas, in that case the benefit would be given for triplet. Okay, further guys, please remember here, medical insurance premium paid by employer is fully exempt. This is only for the medical reimbursement. Okay, and here that it's allowed not only to the employee but to see spouse, children and dependent relatives as well. Yes. Next part is loan given to employee at a concessional rate. So we will check this SBI rate and your rate, whichever is the difference, that is the perquisite in the hands of employee. So for example, State Bank of India is giving rate loan at 10%, employer is given as 6%. So 4% is the benefit received by employee. So this will be taxable in the hands of employee as it is a perquisite. Next, gift. If gift is in cash, fully taxable. Please remember this. If the gift is in cash, it is fully taxable. If the gift is in kind, if its fair market value is up to 5,000, it's enough. Above 5,000, it is fully taxable. So first check whether the gift is in kind or cash. Cash 1 रुपया भी रहा तो fully taxable है, और kind में है तो up to 5,000 market value it is exempt. Above 5,000 it is taxable. Now here there are two school of thoughts, and both are eligible for ICI. One says that if it is in kind and the fair market value is above 5,000, in that case whole value is taxable. Another says that up to 5,000 is exempt, above 5,000 is taxable. Both are right. Whatever you consider, please write assumption below it and note it down there. Okay, but generally what happens, ICI in the main answer they take it only like this, not up to wala thing. और नीचे assumption में लिखते हैं कि you can also solve it in another way by taking up to 5,000 as a non-taxable. So please, I will suggest you can go for anything. I will suggest go for this, because what happens if checker also gets the same answer sheet, right? So what happens in the initially what is written correct, वो generally वो ही देखता है. It may happen कि वो सिर्फ ऊपर का ही देखे, नीचे का देखा ही नहीं कि ऐसा भी assumption दिया हुआ है. So I will suggest go with this. Above 5,000 fully taxable, below 5,000 fully exempt. Okay. Next, if they receive any employee stock option, in this case again what would be the fair market value minus issue price? The benefit, the net benefit received by employee will be fully taxable in the hands of employee under the head salary. Okay. Further, there has been amendment into this last year, which says that fair market value will be taken as a date of option exercised by employee. तो जब option exercise करेंगे तब की हम fair market value लेंगे, और generally taxability will be on the date of exercising option. In case of eligible startup, it will be earlier of the following. So generally it will be on the date of exercising option, but in the case of startup, it can be 48 months from the end of assessment year, selling of such shares, or leave the employee for such who have received from whom you have received such ESOP. Whichever would be earlier from this would be your taxability point. Okay. Yes. Any queries so far, guys? Anything you want to be specifically repeated? Okay, everything clear? Perfect. Next interesting thing comes here is your movable asset. Okay, now if employer provides you any movable asset, in this case, if it is computer or laptop, desktop, computer, laptop, whatever the number is, it is fully exempt. He has just given you for using it. He haven't transferred you for the on your name. See, pay attention. These are two confusing things. He has just given you for using it. Okay. So laptop, computer fully exempt. Other assets, TV, etc. If it is owned by employer, 10% of cost. If it is hired by employer, higher charges. Simple. So he haven't transferred it to you. He has just given it to use it. Computer, laptop fully exempt. Other asset 10% of cost or higher charges if hired by employer. Next is transfer of your movable assets. So now he has transferring the assets on your name. So in this case, if it is computer, laptop, taxable amount minus will be WDV minus if any consideration he has charged to you. So now he is transferring the asset to you. वो मुझे दे रहा है, मेरे नाम पे कर रहा है. So whatever is the WDV minus if any consideration he is asking from me, 5, 10, 15,000 rupees. WDV has to be taken at 50% depreciation. Okay. For car, I am saying only car, not motor vehicle, two-wheeler nahi, only car. WDV will be 20% WDV method, and in case of any other asset, it would be 10% SLM method. So in many questions they give you motorbike, they write it as motorbike. Okay, motorbike. In that case, what you will take? You will take SLM depreciation at 10%. Whatever will be the closing value of the asset, you will minus if any consideration is charged. The balance would be taxable. In one question in study material specifically, they have said what they have said. Say from 1st of April to 30th of September, you have used the motorcycle, and on 1st of October, he have transferred it on your name. So please remember, for this 6 months, it is going to be 10% for the complete year. So proportionately of the cost, and then it is transferred, and then you will calculate the transfer of asset ka differently perquisite amount. Everything clear? So please clearly define this in your question as well. Check it correctly what is given. Is it right from the date of transfer? Is it right? It is used or transfer. And in case of transfer, calculate correct depreciation for each completed years. Okay. Next is lunch facility. If lunch facility is provided by employer, up to 50 rupees per meal is exempt. Above that is fully taxable. Tea, coffee, snacks is absolutely exempt. Now next and very interesting part comes here is about your rent-free accommodation. Okay, so if your rent-free accommodation is provided by government employee, the answer is very simple. The license fee itself will become your perquisite value. In other case, we will calculate first bad BCM wala salary. What is bad BCM wala salary? So pay attention here. See, which includes basic salary, it includes DA, it includes bonus, it includes taxable, it includes commission, all commission, total commission, fixed as well as turnover wala. DA सिर्फ in terms वाला रहेगा, and it includes any other monetary compensation as well if he has received. So you will add them all and you will calculate a salary. So if the employer provides this rent-free accommodation, the perquisite value would be 7.5, 10 or 15% depending upon the population of that city. And if it is hired by employer, it will be 15% of salary or the higher charges, whichever is lower. Furniture भी provide किया है तो 10% of the cost, and अगर hire करके provide किया है तो higher charges. Okay, so please pay attention. If the population is below 10 lakh, the perquisite is 7.5% into salary. What is salary? Bad BCM. If the population is 10 to 25 lakh, the 10% of the salary, and if the population is above 25 lakh, it is 15% of the salary. Please go through it nicely. It's one of the interesting thing here. Government employee license fee, baat khatam. Non-government employee make two parts. One part which talks about what? Which talk about if the accommodation is owned by employer, 7.5, 10 or 15% of salary. Another part which talks about if accommodation is hired by employer, higher charges or 15% of salary, whichever is lower. Now please pay attention here. 7.5, 15 and 10% कब आएगा, and what the salary includes. This is the star point here. Salary include basic salary, DA in terms, total commission, any other allowances as well as bonus. So just go through it once. Ask me if you have any queries here. Done. Next is hotel benefit. If a hotel benefit is received, if it is in case of transfer of employee up to 15 days exempt. Above that, if it's given, it's 24% of bad BCM or higher charges, whichever is lower. So remember, the salary is bad BCM in case of accommodations. The salary is basic plus DA total in case of only पोगा वाली salary. हमेशा वाली salary तो बहुत बार use हुई है. And there is one more salary which we'll learn right now in some time. The another very interesting thing comes here into picture is the car facility. If the car facility has been provided by employer, okay, you have to see what purpose employee is using this car for. If this car is for fully official use, no perquisite, as there is no benefit as such is receiving. If the car is fully used for personal purpose, there is perquisite, which is 10% of the cost or higher charges. अगर ड्राइवर होगा तो ड्राइवर की भी सैलरी ऐड कर दो, रिपेयर मेंटेनेंस है तो वो भी ऐड कर दो. So first two things are very simple. If car is been used by employer for complete official, no perk. For fully, what do we say, personal, everything is perk. So 10% of the cost or higher charges as applicable. But problem is what, and the complication is where the car is partly used for personal purpose and partly used for official purpose. Okay, so this is a very interesting chart of which you could take a screenshot. It will help you a lot for your learning. So when the car is for personal, कोई टेंशन नहीं है, पूरा taxable है. Official, nothing is taxable. But partly personal and partly official. So now we have to divide this case. First, you will see where the car is owned by employee or owned by employer. So if employee is owning a car and he is using partly for office and partly for personal purpose, and maintenance expenditures are paid by employee itself. मेरी कार है, मैं खुद यूज पैसा दे रहा हूँ रिपेयर मेंटेनेंस का और ऑफिस के लिए यूज कर रहा हूँ, तो परक्विजिट कहाँ है भाई? ये तो उल्टा मेरा नुकसान है. There is no benefit. Car is of mine. Expenditure is given by employer. We'll ask him, write down how much you are giving it to me, and we'll subtract what? 1800, 2400 per month. The balance would be the perquisite. Again, I'm saying, when a car given by employer used for personal as well as official use, so there are four cases. First case, my car, my expenditure, no perquisite for me. Second case, my car, expenditure by employer, will ask him, write down how much you are paying, subtract 1800 or 2400 per month. Third case is the car owned by employer and the maintenance is also given by employer. Okay, in that case the perquisite is 1800 or 2400. The maintenance is given by me. In that case it is 600 or 900, depending upon the CC of vehicle. If it's above 1600, so the higher one, below 1600 it is lower one. Everyone clear? It is dot 1600 lower one. Please remember this. So in this case of partly used for office and partly personal, you will do two cases. Who cars it is? If mine car, my expenditure, no perquisite. Mine car, his expenditure minus 2400, 1800. His car, his expenditure 1800, 2400 per month. His car, my expenditure 600, 900 per month. Everyone clear? Tell me whether this chart is helpful for you. Do you had a chart like this before? Come on, say me now. It's a very much long time when I am only speaking and it is getting one-sided now for me. Yes, everyone, please speak to me. Do you have this chart from before? Is it good for you? How are you? How's the class going? Say me anything from your side as well now. It's so much time now. Last 1 hour I am only speaking continuously. हाँ, Bhumika said clear, sir. Thank you, Malika, for the usefulness of this chart. Clear? Okay. Are you everyone clear? Very good. Very good. Okay. Let's go further. Now, few small parts remaining of this chapter. Okay. First one of this is transport facility given by employer. In this case, airline, railway facility fully exempt. Other, it is fully taxable. Okay. For transport company employees only. Okay. Yes. Thank you, Malika. Education facility for employee. Now please understand, education facility for employee in this case, if it is for employee himself, so say employer के स्कूल में मुझे खुद को एडमिशन दे दिया है, it is fully exempt. Okay, it is given for my children, it is exempt up to 1000 per month. So if the benefit is received above 1000, you'll write it down, you'll subtract 1000 per month and the balance is going to be taxable. Okay. Further, for other relatives, it is fully taxable. So if it is for your children, it is exempt up to 1000. If it is in employer's own school college or a tie-up wala school college, for me it is fully exempt. Okay. Further, gas, electricity, water supply fully taxable. That is, it is perquisite. Free servant at home fully taxable. At office, whatever salary you are paying, you are getting as a reimbursement minus whatever you are paying him. Any other perquisite fully taxable. Also, please remember following perquisite are fully exempt. Telephone mobile bill or reimbursement of telephone mobile bill is fully exempt. Further, scholarship of employees' children for education, scholarship is given, not admission, scholarship is given, fully exempt. Goods sold by employer to employee at reasonable prices, even though a bit benefit is received, but it is fully exempt. And tax on non-monetary perquisites paid by employer is also fully exempt. Okay, now this is a bit interesting thing. Tax on non-monetary perquisite. Say if employer, okay, before going that, please read this for, try to remember this. This can be one of your MCQ question. Read this, guys. Done, guys? Okay. Now please pay attention here. Tax on non-monetary perquisite. Okay. So see here. Now whatever tax you pay on the non-monetary perquisite is what, pay attention. Say if an employer has given employee some perquisite, say of 1 lakh, non-monetary, a benefit of 1 lakh, not exactly amount in cash, but a benefit of 1 lakh. Employer nowadays are so helpful that they say that because of this perquisite is there, it is added to your salary, you have to also pay say tax of 30,000 upon this. This will also be paid by me. Tax on non-monetary perquisite, this will also be paid by me. I am very much helpful for you, don't worry. मैं बड़ा दिलदार हूँ. So what income tax is, this is दिस इज नॉट अगेन अ परक्यूजिट, नहीं तो क्या होगा, वापस इसके ऊपर टैक्स आएगा, वापस टैक्स आएगा, वापस टैक्स, चलता ही रहेगा चेन, राइट. सो दे से दैट दिस इज नॉट अ परक्यूजिट इन द हैंड्स ऑफ एम्प्लॉय. नॉन मॉनेटरी परक्यूजिट इज अ परक्यूजिट. The tax upon this is not a perquisite. Okay, and they simply disallow this in PGBP, that we'll see tomorrow. Okay, further, okay, further, professional tax. Now professional tax is what, see, pay attention everyone again. So this is employer, this is us, and this is government. If employer reimburses us the profession tax, it will be added into your salary, and later when you pay to the government, it will be added, it will given as a deduction. Okay, so see, if employer pays it, whatever amount he pays it, add to the salary. Whatever amount you pay to the government, add to your deduction under section 16. If your employer doesn't pay it, so salary में कुछ add नहीं होगा, आप जितना pay करोगे वो आपको deduction definitely मिल जाएगा. Okay, next is your entertainment allowance. So here is your 4 type of salary which come into picture, which is here whatever entertainment allowance you receive, exemption is available to only and only government employees, which is least of the following: actual received 5,000 total for the complete year, or 20% of the basic salary. So here is the 4 type of salary which is used, which is only and only the basic salary. Okay, further, the third deduction which is allowed flat to everyone is 50,000 rupees. Yes, this deduction under section 16, it will be applicable to everyone. So here we finish majorly our salary chapter. Okay, and this is the salary card definition which I was talking about, a summary chart which you can copy with yourself. You can take a screenshot or you can write it down. So see here, entertainment allowance के लिए we use only basic salary. For POGA we use basic plus DA both. ये अपनी हमेशा वाली है. Okay, and for hotel we use bad BCM. So just write it down or copy it or take a screenshot of this, guys. Okay, further, sometime in a question they will give you salary in this way. So what to do here? What does this mean? This means that when he joined, he was getting salary of 10,000. Once a year completes, his salary will be increased by 1,000 and his salary will be 11,000. Okay, up to it reaches 13,000. Means third year में जब तक वो 13,000 ना बन जाए. Once it is 13,000, it will again increase by how much every year? 1,500 until it reaches 16,000. Once it reaches 16,000, it will increase by 2,000 up to it reaches 20,000. So sometimes the salary given you is in this scale. So you have to identify आपके year में कितने आ रही है. So for example, if someone joins on 1st of June, so 1st of June to 31st of May, his salary would be the first one. From next year, it would be the additional one. So you have to see in your financial year how much salary comes. So for say 3 months, for 2 months, April, May, June, it will be for April, May, it will be 2 months, it will be the lower one, and rest 10 months, it will be higher one. So the pay scale is generally given in this way. So this you need to understand. So you understand the question as well correctly. And last part of this chapter is your arrears, salary received in arrears. So if you receive any salary of any previous year in this year, it was not definite you will be receiving in the previous year, last year's, you have received this year, so you get an exemption here. रिबेट मिलता है आपको, क्योंकि पिछले साल में भी आपका इनकम कम था तो टैक्स कम आता था, इस बार टैक्स ज्यादा आ रहा है, तो जितना ज्यादा आ रहा है उतना हम आपको रिबेट दे देते हैं. दिस रिबेट इज अंडर सेक्शन 89. हाउ टू कैलकुलेट रिबेट इज पे अटेंशन. देयर आर 6 स्टेप्स फॉर दिस. pay attention how you are going to do it. It's very simple. It may be looking 6 steps, but 6 steps are very simple. Step 1, calculate tax of current year including arrears. सो करंट ईयर में जितने भी आपको इनकम है उसमें जितना एरियर्स मिला है ऐड करके टैक्स कैलकुलेट करो. स्टेप 2, कैलकुलेट टैक्स फॉर करंट ईयर एक्सक्लूडिंग एरियर्स. ओके, सो करंट ईयर इंक्लूडिंग एरियर्स कितना टैक्स आया, एक्सक्लूडिंग एरियर्स कितना टैक्स आया. दिस विल गिव यू द अमाउंट 1 ईयर. फर्दर आगे in future year, now see, you'll do tax in that last year. Calculate tax in that last year जब का ये arrears है उस year का, including arrears, and again calculate tax for that last year excluding arrears. Subtract this, write the amount here, and you subtract this from this. This is the rebate allowed to you under section 57. Got it? So very simple. This year including arrears tax, excluding arrears tax. That year including arrears tax, excluding arrears tax. दोनों का difference is your rebate. So see, this is what given here. And this all steps as well. Just go through it once. See, tax due current year including arrears, tax due current year excluding arrears. इन दोनों का difference. Last year received including arrears, excluding arrears last year. इन दोनों का difference. And the final difference would be of this and this. Done everyone? So here with this we finish our complete chapter. Okay, this question is about arrears, so you can go through this question once in your study material. Yeah, that's it about chapter. So guys, yes, say me, do you have any queries? Everyone, do you have any queries regarding this chapter? Please go through all the questions of study material. They are very important. Each and every question. This is not our regular class, or I generally take every question in the class. Okay, so you have to go through every question in a class for your study material. That's are very important. That is very helpful. All the illustrations as well as all the questions given behind the chapter. Yes, come on, Semi. How's the chapter? How's your Josh? And how's it going till now? So that we can take a break and then we'll move forward now to our next chapter, which is about your capital gains. And also say me if you have any queries. Yes guys, I'm waiting for your reply. Have you slept guys? Only 3 are awake yet. Come on, all 35 students, I want your answer. How's it going? Is everyone clear? Do you have any query in salary chapter? Okay, that's great. So let's take a break of sharp 5 minutes. And let's be back in 5 minutes and then we'll continue from here. Okay, you two take a break. Let me also take a break and then we'll start with our new chapter, which is capital gain. आज capital gain भी खत्म कर देंगे. Okay, yes. In the meantime, if you have any query, please note it down and put it into your message. I will just read it. Okay. Yeah. Shall we start further, guys? Yes. So guys, now let's start with the capital gain chapter. Okay. So see, the trigger point for a capital gain chapter is, see, pay attention here. It says that any profit and gain arising from transfer of capital assets shall be chargeable under the head capital gain in the previous year in which transfer took place. So, to tax any transfer of asset as a capital gain, what is required? It should be a capital asset. There should be a transfer. Then the capital gain will be taxable in the previous year in which the transfer took place. Okay. So the first thing, which assets are capital asset? So the definition is very interesting. What they have said that all the assets, whether or not connected to a business, are capital asset, property of any kind. So पहले तो उन्होंने बता दिया any kind of assets are capital assets. Okay, but then they have excluded certain number of assets from this. What first is your stock in trade. So हमारे total capital assets में से what they have reduced is your stock in trade. Why? Because when you sell stock in trade, so it's taxable in PGBP, right? Second, movable personal property. Next thing which they have taken out from the definition of capital asset is your movable personal property. But once they removed it, उनको याद आया अरे इसमें तो बहुत इंपॉर्टेंट चीजें चले गई. सो इसमें की कुछ चीजें उन्होंने वापस अंदर ले ली. What are this? This is JDPSAO, jewelry, drawing, painting, sculpture, archaeological collection or any other work of art. Once again I'm saying, first they say all the assets are capital assets. From this they have removed some of the assets. First is your stock in trade. The next is your JDPSAO, that is jewelry drawing, painting, sculpture, archaeological collection, any other work of art. That they have included into that. And other than that क्या होता है सर? वॉच, कार, मोबाइल, ये सब कैपिटल एसेट के डेफिनेशन में नहीं है. ओके, what another thing they have removed is rural, wait a minute, what another thing they have removed is rural agriculture land. Okay, and the last thing which they have removed is your gold deposit bonds. So other than this, all the assets are your capital assets, and when you transfer this all the capital assets, there will be a capital gain which will be taxable in the year of transfer. Okay, so now here, pay attention everyone. So if I transfer a mobile phone to someone, I transfer a car to someone, there is no capital gain here. Okay, because they come on your personal movable property. But अगर मैंने ज्वेलरी, ड्राइंग, पेंटिंग, स्कल्पचर, आर्कियोलॉजिकल कलेक्शन, एनी अदर वर्क ऑफ आर्ट ट्रांसफर किया, so that is going to be fully taxable as it is under the definition of capital assets. Now what do they mean by transfer? So when they say transfer includes sell, exchange and relinquishment of asset. मतलब मैंने सेल किया, exchange किया, I took one mobile phone, I given one mobile phone, तो example में ही नहीं, I took one jewelry, I given another jewelry. This is exchange. Relinquishment, I given it out. Extinguishment, मैंने कहा अब से मेरा ये रिंग नहीं है, जिसको उठाना है ले लो. Okay, even that is considered under transfer. Further, compulsory acquisition of your land under any law. If any of your asset is compulsorily acquired by government, okay, that is also transfer. Conversion of capital asset into stock in trade or vice versa. आपकी कैपिटल एसेट को स्टॉक इन ट्रेड में कन्वर्ट किया आपने, Even that is a transfer. This is a special case. We'll see that later on. Allowing the possession of immovable property to be taken or retained in part performance of a contract. You given the possession of your immovable property. Any transaction which have effect of transferring and the redemption of ZCB. These all are included under transfer of asset. Some of this we are going to see in detail further. Don't worry about that. Okay. Now here, one thing is, remember when we were talking about the capital asset definition, four things we removed from the definition. One was stock in trade, another was personal movable property except GDP SAO and your rural agriculture land and gold deposit bond. So when they were saying rural agriculture land, so what they mean rural agriculture land which is not urban land. So which land are urban? So see here what they have said. If the population of a village is 10,000 or less than 10,000, the boundary of the village and the land inside is the urban land. If the population of village is 10,000 to 1 lakh, आप बाउंड्री से 2 किलोमीटर दूर जाओ और एक नई बाउंड्री बनाओ. If the population of the village is 1 lakh to 10 lakh, आप बाउंड्री से 6 किलोमीटर दूर जाइए, एक नया बाउंड्री बनेगी. मतलब घर आपके विलेज सिटी के बाउंड्री से 6 किलोमीटर अवे. Land inside is urban, outside is rural. If the population is about 10 lakh, inside is rural, inside is urban, outside is rural. And if you transfer such rural land, there will be no capital gain tax as it is not covered under the definition of capital asset. Everyone clear? Okay. Further, this capital assets are divided into two parts. One is short term, another is long term. Which are short term and which are long term to see. The first part talks about three assets, which is securities other than listed in recognized stock exchange, units of UTI, equity oriented unit, and ZCB. These three assets. Wait a minute. Here there is mistake. यहाँ पे other than नहीं आएगा. Securities which are listed in stock exchange. Okay. Units of equity oriented units और UTI और ZCB. ये तीनों को अगर आप एक साल तक रखते हो तो शॉर्ट टर्म, एक साल से ज्यादा रखोगे तो लॉन्ग टर्म. Second block is of your unlisted shares and immovable property. The limit for them is of 2 years. Less than 2 years is your short term, above more than 2 years is your long term, and the last is your any other asset. Less than 3 years is short term, more than 3 years is going to be the long term. Everyone clear? Just try to remember all of them. There can be a MCQ question upon for this. Okay, so first block talks about listed shares, equity oriented units, UTI units, and ZCB, and limit is 1 year. Second block is all unlisted shares and immovable property, limit is 2 years, and other than that all assets limit is 3 years. So less than that short term, above more than that if you hold them it is long term. Okay. Further, zero coupon bond, you must be knowing a bond which doesn't give any coupon. Its value is in the maturity itself. Okay. And how you are going to compute a capital gain. So capital gain will be computed, see, in this format. Full value of consideration minus any transfer expenditure if you are done, which gives you net consideration. Subtract your cost of acquisition and your cost of improvement. Cost of acquisition is nothing but your purchase cost. Improvement is if you done some addition into that, and the balance would be your capital gain. Remember, this cost of acquisition and cost of improvement will be done indexed when the gain is going to be long term. So indexation benefit is available for long term capital assets. And how asset will be going to be long term, that's what just we have read, that 3 year, 2 year and 1 year limit. Okay, so how we are going to indexation? So indexation is going to be the cost of acquisition multiplied by CII of the year of the transfer year. Remember this. Don't remember this as a current year. Remember it as a transfer year upon CI of the year when it was acquired. And in case of this, what we say, improvement CI of the in which improvement took place. If the acquisition took place before 2001 or 2, in that case, take the CI of 2001 on 2. Can you please say me what is the CI for 22-23? What is the CI for 22-23, your financial year? Yes, everyone? Okay, let's see. In the meantime, you say me. Further, 331. Yes, very good. Okay, so what do? You multiply by the year of transfer in whichever year the transfer happened, divided by CI of the year of acquisition. If it is acquired before 1/4/2001, take the fair market value as on 1/4/2001 and the CI of the same year. Okay, if the improvement is done before 1/4/2001, you have to simply ignore that because it would be already considered in the fair market value as on 1/4/2001. Okay, further, see, assessee who is a non-resident, asset should be share or debenture of Indian company, and such asset is acquired in foreign currency by way of purchase or reinvestment, then the capital gain shall be calculated in foreign currency. What it says, if a assessee is a non-resident, who is non-resident, who hasn't came to India as such, okay, and he have invested in some securities in India, so in the foreign currency he have invested, so whatever gain he has got will be calculated in foreign currency and later on will be converted into the Indian currency and taxed. So how it will be converted into foreign currency? So cost of acquisition will be converted on the average of TTBR, मतलब जो भी आपका buying rate रहेगा और selling rate रहेगा उसके average पे. Transfer expenditure will be also taken on average. Sell consideration will be also taken on average on the date of sale transfer, and capital gain will be converted on the buying rate. Everyone clear? So this is done only for the non-resident who invest into India, so that to secure them from the foreign currency fluctuations, and at the same time to make investment more attractable to them. Next, no indexation will be done in the case of debentures and bonds. Index benefit not allowed in case of debentures except capital indexation bond and sovereign gold bond. कोई भी बॉन्ड के ऊपर आपको लॉन्ग टर्म के ऊपर इंडेक्सेशन का बेनिफिट यू वोंट गेट इट until unless it is a gold bond or capital indexation bonds. Okay, further, this is the same thing. Yeah, foreign exchange fluctuation on rupee denominated bond in case of non-resident. If there is any fluctuation in foreign exchange, in this case, this is very interesting and quite difficult and complex to understand. Okay, what it says that if someone has invested into India and the gain is there and there is some extra gain due to the foreign fluctuation, so this extra gain due to the foreign fluctuation will be ignored, which will not be taxed. Only the gain on the bonds will be taxed. Okay, similarly, at the same time, if there is some loss to him due to this foreign fluctuation, this loss is allowed to set off, but gain is not taxed. Again, an attractive offer for a non-resident to invest in India. What it simply means? It simply means that someone invested in India at say rupees 100 bond. The 100 bond is redeemed at 110. So he will be taxed for only this 10 rupees. That's it. Not for the foreign fluctuation which may have gone from 83 to 85 or whatever. So आप total gain निकालोगे और total gain में से आप foreign fluctuation का हटा दोगे and the balance would be only taxable. Okay, so that's only in case of again non-resident. Further, Security transaction tax not allowed to be paid, not allowed as deduction, paid on the sale or purchase of the shares, not allowed under the capital gain. So what tax you pay as security transaction tax while sale and purchase of your securities is not allowed as a deduction to you. Okay. Further, cost of acquisition in case of goodwill, trademark, brand name, right to manufacture, tenancy right, loom permit, in all this case, if it is self-generated, the cost of acquisition would be nil. If it is purchased, the cost of acquisition is going to be the purchase price. In short, they're talking about the all the intangible assets. And what they say that the cost of acquisition for all of this asset, if it is self-generated, और self-generated रहेगा तो कोई कुछ भी cost रख देगा ना, we don't trust you. So in that case, the cost of acquisition will be always nil. Whereas if it is purchased from someone, so purchase price will become the cost of acquisition. Let's go through this one paragraph. Ask me if you have any queries. Okay. Further, if benefit of fair market value as on 1/4/2001 is not applicable in the above assets. Okay, so in this assets, the benefit of fair market value as on 1/4/2001, if it is generated before it, is not available. Further, if there is a bonus share, now so please pay attention. If any asset is acquired before, so we bring them to the fair market value, and from here we take the cost inflation index. But if this is intangible assets acquired before, we do not give the benefit of fair market value. Self-generated, the cost of acquisition will be always nil. Purchase, the cost will be always purchase price. Further, in case of bonus shares, if bonus shares are acquired before 1/4/2001, bonus shares are free of cost shares, right? But if still they are acquired before 1/4/2001, in that case, the exemption, we will take the fair market value as a cost of acquisition. If it is acquired after 1/4/2001, we will take nil as cost of acquisition. So this is specific, you have to remember, okay, when you are doing your MCQ questions. Why? Because this is a famous and very much favorite question of your examiners. Okay, so bonus shares before 1/4/2001 is at fair market value, after 1/4/2001 is at nil.
Hello.
Clear? Further, if there is a right share, so pay attention everyone. If there is right share, I will just give this with an example. Okay, say everyone pay attention. Say I have got of right of Reliance, whose market value is say 2500. Reliance says me I can buy this for 2000. Okay, so if I renounce this right to my friend at 200 rupees, I say, my friend, I do not want this right, you take this right. So this 200 rupees becomes my capital gain. Further, my friend gives me 200 plus he gives Reliance company 2000. So totally acquire for how much? 2200. So 2200 is cost of acquisition for my friend of this Reliance shares. That's what's said in this diagram. Go through it once. Done? Any queries, guys? Okay. Further, cost of improvement. As I already said, if you have done any improvement before 1/4/2001, ignore it. If improvement is after 1/4/2001, consider the same. The next is very important part, which talks about exceptions to your charging section 45(1). What charging section said? Charging section said that if an asset is a capital asset and is transferred, in this case there will be capital gain in the year of transfer, right? But certain 4 cases are there when the capital gain is not taxable in the year of transfer, but it is taxable in some other year. Okay, the first case is when stock in trade is converted into capital asset. When capital asset is converted into stock in trade and then sold in PGBP. Okay, in this case, for example, say I had some jewelry with me. Is jewelry a capital asset? Yes, it is in person movable asset, but still it is included in capital asset. I have converted this into my business. I have made a jewelry shop and then I'm selling this. So the day when I'm converting this capital asset into the business asset, the stock in trade is the year of transfer. So generally what this says that the capital gain is capital gain is taxable in the year of transfer, but in this exceptional case it will be taxable when the stock actually sells. Okay, so जब ये stock actually sell होगा तब ये capital gain transfer का आपको लगेगा. How much would be capital gain? Would be your cost and your fair market value. इन दोनों का difference. So see, fair market value minus cost of acquisition would be your capital gain. Depending upon the period of holding, it will be short term or long term. And sell price in stock market and the actual final sales price of this jewelry minus fair market value would be your PGBP. Everyone clear? So this is the first exceptional case where the capital gain is not taxable in the year of transfer but some else year. There is one more another case which talks about this compensation on compulsory acquisition under any law. So if your assets are compulsory acquired, okay, okay, just a second. Yeah, so now here when a compulsory when you get a compensation on compulsory acquisition of land, now see what happens. Now government knows that they delays generally the compensation. So say my land was acquired in 2016, so it is a transfer, but compensation, initial compensation was received in 2020. So this is the year when the capital gain will be taxable. So this is the second exception for the rule, capital gain is taxable in the year of transfer. So when it will be taxed? When the initial compensation is received. As soon as you receive the initial compensation, the full capital gain will be taxed there. Okay, in future if you get enhanced compensation, आपको लगा आपको compensation कम मिला है, you go to the court, you increase your compensation. If you enhance your compensation, in that case you will just subtract the litigation charges and everything will be taxable. Why only litigation charges? Because cost of acquisition is already subtracted from the original compensation. If the government gives you an interim compensation, please wait for the final compensation. Interim compensation will be not taxable because it's an interim, it's in middle of something, not fixed yet, right? So this is the second case where the capital gain is taxable in the year of initial compensation receivable. Third is the case where insurance damages are received. So if your any asset has been damaged and insurance compensation is received, so the taxable, so the damage, when the damage is occurred, that is a transfer year, but when the compensation is received, that is the taxable year. Okay, so your capital gain would be the fair market value of on which you get the compensation minus cost of acquisition, and that will be your capital gain. Fourth and the last case of joint development agreement. So now here, pay attention everyone. Say I had a piece of land which I given to a builder to do a building upon the same. Okay. As soon as I give this land to the builder, that is my transfer year. Okay. When this building gets completion certificate, that is the taxable year. Again, transfer year is separate, taxable year is separate. This is the fourth and the last case. Okay, now how much would be the full value of consideration? So fair market value of this flats, how much ever flats I have got, plus any cash compensation, matlab any bank compensation I have received, that will be the full value of consideration for me. Okay, so these are the four cases where the transfer year is separate and taxable year is separate, and this is the summary chart which will give you all details here. So see, first capital asset converted in stock in trade, transfer year is conversion, taxable year is stock it sold. Your compulsory acquisition of asset, transfer year is when it is acquired, capital taxable year is when you have been getting the initial compensation. Insurance damages, when damage occurred, that is a transfer year, but when you get the claim, that is the taxable year. And the last, when you given possession of the land, that is transfer year, but when you get the CC, the completion certificate of the project, that is the completion year. So these are the four examples which are the exception to the rule that capital gain is taxable in the year of transfer itself. Everyone clear? Just go through this and note it down, take a photo of this. Okay, let me know if you have any query regarding this. Just a minute, I will just fill my bottle and be back. In the meantime, let me know if you guys have any query regarding this. Everyone clear? Okay. Now see guys, there is one interesting thing about this. If the capital gain question comes, many a times it comes from this part. Okay, and where you guys do a mistake, so pay attention, I will just let you know. Just a second. Yeah. See now, what happens now when you are writing cost of acquisition and when you are doing index cost of acquisition, what we do, we multiply it by CII upon CII of acquisition year, right? And we are so used to with what, with multiplying it by your current year CII कि आप यहाँ पे भी current year CII लेते हो, but this is wrong. In these four situations, either your insurance claim or your destruction of capital asset. That's what stock in trade converted into stock in trade, joint development agreement or initial or the compulsory acquisition. आप यहाँ पे CII कौन सा लोगे? In the year of transfer. So if the year of transfer is 2020, take the CII of 20, not 23. Are you getting this? Only for this question. Rest all question, the current year CII will be there. But the question for this, why? Because in this question, the CII, the transfer year is separate and taxable year is separate. For all other rest question, the taxable and transfer year is same. So that comes to 2022-23. But in this question, the transfer year is separate. So you have to take the CII of the year of transfer. Everyone clear this? Please, the guys who are sitting in the class, no one will do this silly mistake ever. Okay? Okay, let's go further. Now, see, when the asset is transferred into demat account, okay, any shares or security which are sold, so we use first in first out method. So the demat account, the demat is dematerialized account, okay. So even if physical shares are there, we will see कि ये demat account के अंदर कौन सा पहले आया वो पहले जाएगा. FIFO you must have learned in costing. So even if the share is of 2010, but it was entered into demat account in 2022, so this will be the FIFO date for them. So if any share which is already there in 2015, even though this is older than this, but still what you will use? You use the demat account का first in first out method. Clear everyone? Further, yeah, further, another interesting and very important section, section 50C. This is a star section of your capital gains, which says that your full value of consideration will be stamp duty, not the actual value in this certain cases. What these cases are defined here? Wherever the SDV does not more than 110% of consideration, the sale consideration shall be treated as FVOC. What does this mean? This means that if my sale consideration is 100, from this I will go 10% above. That comes to how much? 110. If my SDV is below this, this is full value of consideration which you will calculate for your capital gain. If my SDV is above this, SDV will become the full value of consideration, even though आपको मिला नहीं है वो. Why sir? Why this is happening like this? Because stamp duty value is generally very much low in comparison to others. Once again, I am repeating. Whatever amount your transaction occurred, from that go 110%. If your stamp duty value is inside the 110%, then great. If it is above this, then your stamp duty value will itself become your full value of consideration. Everyone clear? Further, now say I am not satisfied with my stamp duty of value. I am saying नहीं sir, कितना भी कुछ भी हो, इतनी ज़्यादा मेरी stamp duty value है ही नहीं. So I can ask my assessing officer to refer the case to the valuation officer. If valuation officer increases the stamp duty value, so we would consider him, will ignore him. If it decreases the stamp duty value, we'll consider the new decreased stamp duty value. So now in our example, I will give an example. Pay attention here. Say my sale consideration is 100. Okay, just a second. Yeah, my sale consideration is 100 and My stamp duty value is 115. Say me what will be your FVOC. Say me what will be your FVOC, guys. Yes. What will be SVOC? FVOC, guys. So can we start from? Yes, Shana, we will do that as well. Don't worry. Let me finish the chapter first. So in this case, the FVOC would be how much? 115. Why? It is above 110% of your sell consideration. Okay. Now say I gone to my assessing officer and asked him that this 515 is too much high. Please ask to a valuation officer and please change this. So they refer the case to valuation officer. Valuation officer decrease it to 105. Great. We'll consider it. If we increased it to 120, we will reject it. We'll keep it 115 only. That's what said here. Everything clear? Just a second. Guys, no one is replying. Okay, Rida has given. Perfect. Okay. Next. Advance money forfeited. Again, very interesting. This will go to this when we will be learning income from other sources. Now, if there is any advance money which is forfeited before 1/4/2014, it shall be reduced from cost of acquisition before indexation. So what happens, say I have asked someone to sell the asset and I have given them advance, but later on I say I do not want to purchase it. So the other party has forfeited the amount, taken the amount. So this is income of them. So if it has been forfeited before 1/4/14, it will be reduced from cost of acquisition before indexation. And if it is forfeited after 1/4/14, it will be taxable in the respective year in the income from other sources. Okay. So now further. Now please pay attention, guys. Listen, I'm extending this today's class up to 2. A small, very small part of like 15-20 minutes is remaining of capital gain. Let's finish this complete chapter. So it will be good for, we will start in the next session tomorrow, right from PGBP. Everyone fine with this? Okay. Next is slump sell. Another interesting and important and scoring questions for you in examination. What is slump sell? In slump sell, generally what happens, you don't sell single plant and machinery or stock in trade or single asset or single any different other asset. You sell the complete unit itself, total unit, with stock, with work in progress, with your raw material, with your machinery, everything. So a slump sell is there. So slump sale is taxable in the capital gains chapter. How it is taxable? Pay attention here. See, whatever is your full value of consideration you have received, write it down. Subtract transfer expenditure, that comes your net consideration. From that you will write down the net worth of the undertaking, and the balance would be your short term or long term capital gain, as depending upon number of years you are holding the complete factory. Okay, now how you will calculate net worth? So take all the assets at the book value, depreciable assets as per WDV. Okay, liabilities take at book value, and the asset minus liability will be your what do we say, will be your net worth. Please remember, do not consider any revaluation. Net worth is negative, consider it nil. Okay, further, revaluation of assets shall be ignored, as I've said you, and no profit under PGBP. सारा profit आपका यहाँ पर ही आ जाएगा. So in a case of slump sale, what you will do? Full value of consideration minus transfer expenditure will give you net consideration minus what you will do? You will subtract your cost of acquisition, which is nothing but the net worth. For net worth, all assets and liability will be taken at book value. Depreciable asset will be taken at WDV. No revaluation has to be taken here, considered here. Everyone clear? Now there is one question of the same into your book. This question is there of Mr. A in your study material. I will suggest please go through this question, because sometimes this question has appeared as it is into your paper. And this question will clear your all the concepts of your, what do we say, of your slump sale. Yes, Shana, thank you so much. Yeah, I do come in Trisha classes, but I generally don't come in Bangalore. I teach in Udupi and Alvas. Everyone clear? So please do this in your homework. This will give you a complete idea about your slump sale. Okay? Now, coming to the last second part of this chapter, which talks about certain transactions which are absolutely exempt. Okay? Which are exempt from capital gains. Which are these transactions? So pay attention. Distribution of capital asset on partial or total partition of HUF. They are not considered as transfer, so no capital gain. Because see, if you remember, in the starting itself, we have learned a definition that for a capital gain to be taxable, asset should be a capital asset plus there should be a transfer. So these are certain things which are specifically said it is not a transfer. So no capital gain. So first, distribution of HUF asset during HUF. Second, transfer of capital asset under gift irrevocable trust. In this case, when the gift has been given to someone else, it is not taxable, and the period of holding is right from the previous person's period. Transfer of asset under amalgamation by amalgamating company to amalgamated company, provided that amalgamated company is Indian company. Fourth and fifth, transfer of assets from holding to subsidiary or subsidiary to holding whenever there is 100% holding subsidiary relationship. One famous question from this part is that they generally ask you, see, I feel it's this question, no, this is not. They ask you what a holding company is having a 75% shares of a subsidiary company, and now if they transfer any asset, will it be taxable under capital gain or not? So yes, it will be taxed. Why? Because there is 100% holding required. The second part of this question, they ask you that suggest us some way how we can save this tax. So you can suggest them, please acquire the balanced 25% shares, and this would be 100% holding subsidiary, and then whatever asset you transfer from holding to subsidiary or subsidiary to holding, it will be absolutely exempt until unless the transferee company is an Indian company. Okay, so see in this example, if a gift is given, okay, so the period of holding is right from the starting to the previous owner as well, and the indexation benefit also you get for the complete period. So अगर मुझे कोई एसेट गिफ्ट मिली है, तो जिससे मिली है उसके परचेज के डेट के से मेरा पूरा पीरियड ऑफ होल्डिंग माना जाएगा और कॉस्ट ऑफ एक्विजिशन भी माना जाएगा. ओके, further, transfer of capital asset by demerged company to the resulting company. If the company gets divided, so whatever assets has been transferred to them, if the emerging company, new company is a Indian company. Issue of shares by resulting company to shareholders of demerged company. Transfer of rupee denominated bond or Indian company. Transfer of government securities. So ये सारे transfer are not considered as transferred if and capital gain will be not taxable. Now transfer of government security and rupee denominated bond from one non-resident to another non-resident. So ट्रम्प ने बिडेन को कोई बॉन्ड्स बेच दिए, ट्रम्प ने बिडेन को कोई रुपी व्हाट वी से गवर्नमेंट सिक्योरिटी बेची है, नो कैपिटल गेन इन इंडिया. Any transfer of sovereign gold bond is absolutely exempt. Transfer of capital asset being work of, another interesting thing. If you transfer any of your capital asset to art, archaeological collection, scientific art collection, book, drawing, manuscript, painting, to good university, national museum, national art gallery, national archives, national public notified under section 47(9), इन सबको अगर आपने कोई भी ऐसे आर्टिस्टिक चीज या ऐसी कोई चीज ट्रांसफर की है फॉर वॉट एवर अमाउंट इट मे बी, it will be not considered as transfer and hence there will be no capital gain. Further, conversion of bonds and debentures into deposit certificates will be also no transfer, no capital gain. And the last one, transfer of capital asset in reverse mortgage. So what happens, say certain people in old days they take a loan from government from banks by mortgaging their asset, and how this loan is been in a form that they say that once they die you keep the asset. Until they are alive, you give them some money every month, some money. So here, once this mortgage asset, once they are died and this mortgage asset is transferred to a bank, it is not treated as transfer and hence no transfer, no capital gain. So these are 14 cases of no transfer, no capital gain. First of HUF, second of gift, then one of holdings, two of holding subsidiary and subsidiary holding, one demerged to emerging company, amalgamated to amalgamating company, two for their shareholders respectively when they are getting new shares, two for non-residents when transferring rupee denominated bond and what we say government securities, one for gold bond, another for mortgage of your property or reverse mortgage in the scheme of reverse mortgage, and the last one which we already seen that when you transfer your asset to sovereign to any museum. Please remember this, all the conditions, all the 14 things has to be remembered. Do not worry, do not pressurize yourself on learning this. Learning can't happen, you have to just remember this. So if any some similar situation is identified in question paper, you can relate it and you can quickly use it. Clear everyone? Now second part and the small part of taxation is remaining. Last part is of exemptions. So quickly pay attention here. I will just make you draw a small diagram which will help you a lot for learning all your exemptions. Okay, section 54. The first exemption is for whom, guys? Transferring the RHP to RHP. Right? That is section 54. For individual HUF, so remember this both sections are for only individual and HUF. Okay, and for only long-term capital asset. Okay, I will just share this image also with you so you can take a screenshot of this. I have already drawn this in nicer way that will help you. So section 54 exemption is when you transfer one residential house property and you purchase another residential house property. Only thing is that you should purchase it 1 year before or 2 years after the transfer, and if you are construction, so construction is allowed up to 3 years. What would be the exemption? The cost of new asset or the capital gains will be your exemptions. The next is section 54B exemption is transfer of long-term agriculture land, urban agriculture land. Why urban? Because rural is not a capital asset itself. Now here, if you transfer a urban agriculture land and you purchase a new agriculture land, so घर हुआ, घर के बाद खेती. So you purchase one agriculture, sell one agriculture land and purchase another agriculture land. Again, this is applicable for both short term as well as long term. This is also short term as well as long term, and this is as like this long term only. So I have just made a complete matrix. In the class I go in very detail, but here I will just share directly matrix with you so you can quickly take the same. Next, Once you have house, RHP to RHP, agriculture to agriculture. Next is when you have a factory building and you purchase another factory building. Okay, so see here section 54D, compulsory acquisition of a factory building, and in that compensation you purchase another factory building up to 3 years. So in this case the exemption is again the cost of new asset or the capital gain, whichever is lower. Fourth and the last one is when you invest, when you have any long-term capital gain and when you invest into the bonds of Rural Electrification Corporation, National Highway Authority of India, right? Further, see this Power Finance Corporation and Indian Railway Finance Corporation. So if you fund any of this corporation within 6 months of the date of transfer of the capital gain, you will get a maximum deduction of 50 lakhs. Maximum of 50 lakhs. टोटल आप इस साल अगले साल कितना भी मिला दो टोटल मिलेगा आपको 50 lakhs का फॉर पर कैपिटल गेन. That's your 54 EC. Just let me see a diagram for this. And the last one is when you sell any long-term capital asset and you invest into RHP. And when you are purchasing this new RHP, you do not have more than one RHP. Means नए को मिलाकर you have two. In this case, this section 54E F का आपको deduction मिलता है. This deduction is proportionate. That will capital gain upon into cost of new asset upon net consideration. Rest all deduction were cost of new assets or capital gain, whichever is lower. In this case, the deduction is capital gain into cost of new asset upon net consideration. So these are the only 5 exemptions which are applicable for your attempt for CA intermediate. Okay, so first is RHP to RHP, second is agriculture to agriculture, third is factory to factory, fourth is any long-term asset to the bonds, and fifth is any long-term asset to the NHAI bonds. To RHP. Okay, just a minute. I will just see a diagram where the diagram is. Just give me a second. I had a diagram here. Yeah. Just a second. Yeah. See. See this? See this here. Section 54, RHP to RHP. Okay, 1 year before, 2 year after, or 3 years if construction. 54B, urban agricultural land to any agricultural land up to 2 years. 54D is your compulsory acquisition and you are investing into new building up to 3 years. EC, any land and building and investing into the bonds of NHAI, REC, Power Finance or RFC up to 6 months only. And last one, any long-term capital assets other than house property and investing house property should not have more than one house property. Deduction is capital gain into into your cost of new asset upon net consideration. So you'll see first 2 are only for individual HUF, next 2 are for all SSCs, and last is also for only individual HUF. You can also see long term, short term, long term, and long term, short term. and this are only long term. So you can remember this all in a sequence. That will be easy for you. Everyone done? You took a screenshot? Yes, any queries so far, guys? See, this exemption and all this different thing, there is like, I have tried to take it, but I haven't gone in depth again because of the limitation of time. How to do revision, okay? So we have to be quick. So it's your duty that you study in depth after this. Okay, let's go to the last part of taxation of your capital gains. So see here, in case of long-term capital gain, if it is 112A, okay, wait a minute, I will see here if there is chart given. Yeah, first see, in case of short-term capital gain, that gone yaar. Okay, let me see the institute module. It is not shared by them as well. I'm just trying to see the chart, guys, so it will be helpful for you. Yeah, it's here. So see here, pay attention. In case of your long-term capital gain, the normal long-term capital gain will be taxed at 20%. Okay, long-term capital gain for equity share, unit oriented of equity unit, business trust. If you remember, this was the first block of your difference of long-term and short-term, जिसका 1 year का था limit. For them, it is 10% above 1 lakh. Okay, so in case of long-term capital gain, there are two parts. 112A. It is 20% flat. Above 1 lakh, it is 10%. Okay. Further, short-term capital gain, again there are two parts. So short-term capital gain is going to be taxed at 15%. And this is capital gain, long-term capital gain and short-term capital gain. Tax at flat 15%. Wait a minute. Here also there are two parts. One, again, if it is equity share, equity oriented units or units of business trust, it will be taxed at flat 15% other than this will be added to your total income, and it will be taxed at your respected slab rate. So this is the taxability of your capital gain. Once again, I will repeat. In case of your short-term capital gain as well as long-term capital gain, if it is of equity share, equity-oriented units, or units of business trust, in that case, short-term capital gain will be at 15% and long-term capital gain will be at 10% above 1 lakh. Other than that, all assets short-term capital gain will be added to your slab rates. So whatever is respect to your slab rate, it will be taxable accordingly, and long-term capital gain will be taxed at flat 20%. Everyone clear? Yes. Okay. With this, we finish our capital gain chapter part as well. There is a bit extra thing for this here for your this chart as well. I will suggest you go in detail with your study material for that. Okay, because that has to be seen with example. If only I will speak theoretically now, so it won't be it will be in fact confusing for you. Okay, so that's why I'm stopping here for capital gains. That's it for today. Thank you so much for your patience hearing. If you have any queries, please let me know. I'm waiting for your queries, or else we'll end this session here itself. Tomorrow we are going to meet at sharp 7 in the morning, and we will continue with our last big chapter, that is your PGBP. Okay, so that's it for now. Thank you so much. Let me know if you have any queries. Bye bye. Take care. Enjoy your weekend. Enjoy your Saturday, because I feel you don't have any class today in evening. I was about to keep it, but I thought it's better to keep you free today at least. Welcome, Samita. Welcome, Vaishnavi, Shreya, Shri Raksha. Okay, that's it then. We'll end the class, guys. I feel you don't have any queries. Okay, thank you so much. Bye bye. Take care.